Hi, my name is Louie Prosperi. I want to thank you for joining me today. Normally, when I do a webinar or a presentation, it's done in front of either a live audience or a live webinar or Zoom call where there's a bunch of heads at least. And it makes it easier for me because I don't feel like I'm talking to myself. So these pre-recorded ones are a little more awkward, but I'm going to try my best to make it as entertaining as if you were right in front of me. And hopefully you find this very interesting. So let's begin with the topic, the Magic Carpet Firm Elevating Advisory Services. What we're going to talk about today is literally your firm and how advisory services is probably where everybody should be going. But I might look at it a little differently than what you're used to and indicate where the advisory services are actually embedded in your practice, because you already have some of them already there. They might be just buried or not properly communicated. So let us begin. Oh, before we go any further, just my head's going to be moving back and forth. I have 3 screens and I have to manage the presentation. So I'll do my best to stare at at this camera, so it looks like I'm talking to you directly. But there will be some movement back and forth, and also taking a look at my notes the odd time. All right. So let us begin. So let me introduce you to the Magic Carpet Firm. First of all, why did I call it Magic Carpet Firm? Uh, just because it sounds really cool. It's nicer than just your professional firm. And I would like you to think of your firm as a magic carpet flying through, through as a business flying through the air. Because technically, I think you do fly through the air, and we can use a whole slew of metaphors. The metaphors that I'll be using today is advisory clouds. So your magic carpet is going through the advisory cloud process. So let's talk about where the journey begins. Well, let's talk about the 3 things that we are going to go through today. One is what's happened to the accounting industry and the transformation that's happened. The other one is the role of what is a trusted advisor. And we'll go into a lot more detail of trusted advisor, because when you hear what I'm going to say, that's probably going to be your most important tool, or your most important thing is how do your customers perceive you. And in fact, I strongly believe that they must perceive you as a trusted advisor. If they don't, the relationship between a professional bookkeeper and accountant doesn't work. And we'll go into more detail. And then the advisory clouds metaphor. This is to talk about the different, I would say, the different 3 levels of advisory that you probably produce or provide in your practice, or are trying to. So let us begin with, who are we to our customers? In the olden days, and the reason why I'm saying olden days, because I've been around a little longer. I started my career just as computers were just starting to be introduced to the professional industry. And when I mean by just starting, we worked in our desks, and the computers were in another department where we have to go and use them every now and then. So that's how far back I go. And then when we did get the laptops and all that, they were like 30 pounds. So I've been around a long time, and I've seen a lot of transformations in our industry. And in fact, the technical advances has literally, in the last 10 years, has been like a hockey stick. It's just been going faster and faster and faster. But what has not changed from way back when I first started is trust. Trust has always been a core principle, or a core foundation of our relationships with our clients. If they don't trust us, it'll be hard for us to give them confidence and assurance in their financial information. The other part that's important is the human element. Now today, particularly ever since COVID, the human element has changed. It's no longer possibly meeting face to face or having them come to your office. That has changed. However, there is human element interaction, whether it's email, whether it's a Zoom call, whether it's a telephone call. There's always someone that they want to talk to. or engage in. The the digitization of our industry is has happened, but the human element is still one of the things that really still impacts. And you'll notice that it's hard to build trust if you don't have um, human element contact points. It really is. And then the other one is you have to keep your promises. Uh, we as professionals, basically what we do is we keep promises. We basically help them with their emotional needs as well as their financial needs. And I like that saying, we don't keep books, we keep promises. And that's really what we're doing. So that's who we are to our customers right now. That's who we are to them. And let's take a look at the core. Remember when I talked at the very beginning, trust is the foundation of advisory. When you're providing advice to someone, at the end of the day, you know, they're not the expert, you are. So when you say, this is what I believe, or this is what you should do, or this is why I'm doing this, it's all based on their belief that you know what you're talking about. And if they don't, how can you provide advisory services if you're not giving them that level of confidence? If that trust is not there, one, they're not going to value the advisory. They're probably going to think it's not worth anything because they don't trust you. Two, they might doubt it because they don't trust you, even though you're providing them solid advice. So let's go through this. Let's go through the understanding of what trust in a professional relationship really is all about. You know, when we talk about currency in our profession, you know, when we say, you know, what is the currency in our profession? Is it our skill set? Is it our expertise and our knowledge? Those are usually what I consider standard expectations. They are the baseline for when a customer comes or a client comes to you. They expect your expertise to be a certain level. They expect your knowledge to be a certain level. They expect all that to be at a certain level. Why do they do that? Because they don't know what you do. At the end of the day, their expertise isn't in your area. So what they have to do is basically trust you. So your most valuable currency in your clients is the level of trust they have with you, and you can see this. You just go through your client list or your customer list, and look at the best customers or the ones that you have the most enjoyment with, and the relationships are high. I guarantee you the trust levels are the highest. So understand that the currency of trust is the most valuable currency you have. It surpasses your billable skills, definitely, by all means. So when you think that building relationships is a pain, it's not worth it, it's the core component of your practice. Without the trust, there is no relationship. So the other part that's really important to customers and why this impacts your trust is how you communicate. I'm going to be honest with you. If you don't have good communication interaction with your customer that meets the minimum requirement, the trust factor is going to go down, right? Because if they don't understand what you're doing and you're like a big black box and whatever goes in there they don't know, as soon as the outcome doesn't meet their expectations, which is hard sometimes to read, it's going to impact your ability to service that customer. And building trust, how do you build trust, right? I keep talking about the value of trust, but how do you build it? Well, it's funny. It's not really built on how good your services are. It's literally built on the transparency, the feeling that you're not hiding anything. You're being straightforward with them. Consistent communication is also important. I've been mentoring firms for many years now, and both professional accounting and bookkeeping firms. And one of the things that I find is the professional feels that they can't talk to their customer too much because it'll annoy them and it'll make them not want to be there, right? Communication sometimes is a hindrance. Yes and no. It depends what type of communication, and it depends how it's delivered. But consistent communication with the customer, it has to be done. Um, and we can go into a whole session on that, but here's some things about consistent communication. It's communication that benefits the customer, not that benefits you. When you're communicating and asking information and trying to get information from them. That's not really what they call communication. They call that a pain in the ass. That's what your customer calls that. It's a pain for them to give you information, even though they have to for you to do your job. That's not communication. Communication is when you engage them in a way that when they finish that engagement, they feel better. The other thing that you have to understand is empathy. The customer, at the end of the day, is about themselves, right? It's their business. If they feel you, not necessarily you personally, but more importantly, the firm cares about them, and you'd want to do that. If you're, unless you're a proprietorship and you're a one-person business practice, then it is you. But if you have staff or you have a firm of some sort, the goal is for them to feel that the firm cares about them. And that's really important in building trust. And the other part is when you do establish that trust, what ends up happening as a result of that is that you no longer have a transactional relationship with your customer. It's not bill related, it's not price sensitive. Mind you, price will always get in the way or be part of it because there's always an upper limit of what people think the value is. If you understand their value, not what you perceive their value to be, they're not as price sensitive as you think they are. If they are price sensitive, then it's probably a trust issue, in my opinion, or a lack of confidence in you, or just the way they perceive our profession. And some of that stuff you can fix, and some you can't, and you have to decide whether that's the right customer. So let us continue on this road. So we're going to talk a lot about trust, probably the next 5 or 10 minutes on trust. And the reason why I'm going to continue talking about trust is that is the most important factor in your business model. If you don't build your business model on acquiring a customer and building trust on the onset and making sure they trust you, right, then you're going to have a tough time bringing customers into the fold, keeping them, and also not having them not leave shortly after. Trust is a core service. It's not something that you should think of as an ancillary part. It should be built into your magic carpet firm. If you build the factor that you can trust us and we are reliable and we are the ones that will always have your back, right? Then that changes the entire dynamic. So consider trust as a core service. In fact, the core service. You know, how do I put it? We in today's world, what we do is we prioritize other things like technology, for example. We're using more and more technology to automate the systems to make us more effective. We don't have a choice, to be quite honest, right? To be competitive and to make sure we continue to meet the needs of our customers. The volume of transactions, the interaction, the real-time requirements require us to be very good at navigating technology. True. The business model that we use has to always be an effective requirement. But in that, you have to weave the trust. Now, why am I constantly talking about trust? And I hope that during this conversation that we're having, I know it's only one way because you're not here at the present time, but I'm assuming you're right here. I'm hoping that you're putting in your notes these aha moments, trust, and just writing trust in big capital letters, circling it, underlining it, and literally going back to your firm and literally looking at trust, not from your perspective, but from their perspective, and understand that it does a lot of things for you. Building stability with the relationship is key. It also provides you the honesty factor. Right? If they trust you, they think you're going to be honest and sincere with you. If they trust you, they think when they depend on you, you're reliable. So understand, I am not going to stop saying trust throughout this. Trust is a core service. Trust allows you to build the relationship as a partnership, and it allows you a long-term engagement. All right. Now that we've talked about trust for the last 5 or 10 minutes, I'm going to talk to you about what I'm calling these clouds, advisory clouds. And again, understand you're on a magic carpet, and the goal is to flying high on the advisory clouds. So your first cloud that you have to uh, really hit and understand is understanding the advisory cloud related to your core services. Now, what does that mean? Well, that's a good question, because if you're a bookkeeping firm, your core services are slightly different from an accounting firm, but you still have core services. What I am talking about is the bookkeeping services and recording of transactions, right? Uh, your the traditional talking about bookkeeping, right? And by the way, I'm going to reemphasize this going throughout this. Professional bookkeepers or bookkeeping firms no longer do what I call the traditional sense of the definition of bookkeeping, right? I literally reclassify as data entry. It's a shame that they haven't changed our professional status, because technically a high-end professional bookkeeper or firm is a technology expert, um, is basically a person who can analyze the digital ecosystem of how the transactions flow through, making sure that they're properly accounted for, that they're all accounted for, right? Number one. Number two, that they hit the right places at the right time, you know. And on top of that, we also make sure that the information makes sense, and we take transactions, high volume of transactions, through the automation process, thanks to software and other tools that we use, and it allows the end user or ourselves to have proper information for compiling, for um, tax purposes, and for decision making. All of that has changed from the manual system. So the the level of skill set that a professional firm has today is way beyond what they call bookkeeping services. So when I say bookkeeping services, I really mean today's bookkeeping services. And technically, I would rephrase that to accounting services. I think everything now should be reclassified as accounting services. So that's my 2 cents, and I'll just leave it at that. So the role of professional judgment, just because I just talked about the automation and the tools, has changed dramatically. You're no longer entering data. I mean, you might in certain circumstances when you have to, but at the end of the day, you're moving your customers and you're moving all of your processes to automation. And now we have artificial intelligence. The interesting about artificial intelligence is that it only maybe in some time in the future, and I'm not a you know, I don't know what that looks like. But right now, artificial intelligence value is only to the professional. There's no way that artificial intelligence could provide any real value to the end user, because the knowledge level to understand whether or not what it's producing is reliable, accurate, and consistent, and to verify, they don't have that skill set. Neither does their team, for the most part. So basically, your professional judgment is critical in how things are being done. So the reality is, from the manual or what we do process that we used to charge and people valued, it's now our professional judgment on how the work goes and goes through the system. And that's technically advisory services, right? At the end of the day, those are advisory services. The what we do compared to the how we do it, or what the impact of it is advisory component. So when you look at your core services, and when you've automated systems, and then you do the checks, and then you verify the data, and you make sure that the automation is working properly, they're trusting you on your expertise and knowledge, and then you're saying, yes, this is good. So what does that mean? That means that the trust factor that we talked about in the past is more important today than it ever has before. People say, well, the technology has automated and eliminated our um, our services. No, it's changed them, because the automation has made what how the information is processed into a black box, and nobody knows if it's right or wrong. And the end user, which is the customer, needs your advisory skill set to tell them that it's okay. Now, the ones that don't use it, let buyer beware. So understand level one of advisory services is already built into your core services. The problem is if it's built in, how do we charge for it? And we'll go into some detail of how you may be able to do that. But that's one of the difficulties we have right now because the way we charge for our services is not on our knowledge and skill set, it's on time inputs and how we do the process, which unfortunately is the problem in today's world. All right. So let's talk about the problem. When you have advisory built into that system, you're going to have issues. And here's the what I call the automation paradox. The funny thing is your expertise and knowledge has gone up because you have to keep up to date on the software. You have to know the intricacies of the audit trails in the software to detect errors and issues that might happen so that you can prevent or fix problems before it gets to the customer. However, because we've framed our services based on time and based on, doing the entries, because that's happened, the automation has made the customer perceive that our expertise is less valuable. So it's like an automation paradox. The automation paradox is that, okay, fantastic, our role has become more valuable, at least the advisory component, but the perception on the customer is that it's not as valuable. So how do we do this shift, right? Well, number one, you got to stop talking about your services. You got to stop talking about bank reconciliations. You got to stop talking about data inputs or charging by the transaction or charging by the hour. You got to shift your language to outcomes. And you've probably heard this from other very famous people or other people out there. Outcome focused communication is very difficult. But the reality is the customer or the client doesn't care how the sausage is made, to be quite honest. He just cares how good it tastes. So if you do not focus on the outcome, they're not going to care and they're going to value that process much less. So that is something that you have to focus on. What is the outcome of a bank reconciliation? What is the outcome of certain things? Is it the fact that their HSTs or their sales tax is done properly? Is it the fact that they get their financial information, historical information on time, and they can actually make decisions on it? Can they do a corporate tax return? Does it help the accountant prepare a tax plan? Does it help them with strategic understanding of where their costs are? Can they make analysis? Well, the answer is yes to all of those. But if you talk about bank reconciliations and credit cards and bank accounts and all of that stuff, which is the detail component, they're going to look at it. Well, that's what the software does. You don't do it. What happens? Valuation goes down. So the other thing that you should be focusing on in your reframing is peace of mind emphasis. That software is a black box to the customer. Most of them don't have an accounting or bookkeeping background. They don't process it. Some of their team that does some of the data entry internally is literally just an accounts receivable clerk or an administrative person. So your job is to give them peace of mind that the information is that's done by their staff is done correctly. So focus on peace of mind. Focus on risk reduction. Focus on reliability. Get away from the hourly billing. If you're billing by the hour, you're telling everybody your value is based on time, not on your knowledge. And automation is your worst enemy when it comes to that, because hourly billing says it's the time that I put in based not the value that you get out. And no one cares how much time you put into a service. When you bought that car, when you bought a product, or when you bought, your dry cleaning comes out. Those are all services. No one cares how long it took to do it, but they do care about the outcome. So reframing the value in your core services to the advisory aspects and changing the conversation so that they understand that your value isn't what you do will help you in shifting and flying on that advisory cloud, the level one cloud, which is your core services. Now, this may take time, this may take some effort, and there's a lot of programs out there that can help you. Okay. Cloud 2 is compliance services. This one is an interesting one because it's still a core service, right? The role of the automation has helped us in compliance, right? I mean, even though CRA is trying to get digital, um, the software has definitely allowed us to do it. There's so many programs and so many services out there for payroll, HST. It goes on and on and on, right? However, the knowledge to make sure that those things are filed properly, that's a scary part, right? Because your customers may know how to fill it out, but they don't know if they're putting in the right numbers. They don't know if it makes sense. So they still value your advisory in this core service. So you do charge a little more here because of the fact that they perceive advice or advisory on it. They need you for trust and reliability. So there is more, but role of automation, right? It allows the paradox to come back in. Well, the software does a lot of it. So even though your advisory there, the value is actually not going up. And in fact, given how complex things are, it's harder and harder for them to do it correctly. I'm telling you, the model is very, very difficult here. But you have what I figure in your core compliance services or advisory services, your core compliance services, the advisory component is much easier to capture. Not in the core one, a little much tougher, but can be done. I would recommend to build it that way. The other part is the advisory services and compliance is really important. So like payroll deductions and tax planning, let's be honest, right? The customer doesn't know if it's doing claiming all the payroll deductions that it's supposed to. They use ADP, they use you, whatever, But the way you provide it is literally providing it based. It takes me 20 minutes to do. Sure, the software does it all. It does the calculations. But where's the real value to the customer? Well, number one, reconciled and proper T4s and summaries at the end of the year. That's a high value. We don't talk about it that way. The other part about payroll is the fact that the employee gets paid exactly what he should get paid. And there's not overpayments and underpayments, because the reality is one of their core things that customers are very afraid of is that they don't pay their employees on time and they don't pay what they're right, because that's a big no-no for a lot of small businesses, right? Now, the hard part is, how do you capture the value? Well, I'm just going to let you know that, number one, when you're providing compliance services, you should reframe it as a premium service. The other thing that you should start doing with compliance, and compliance means all tax stuff, whether it's personal tax, corporate tax, whatever tax you want, you should start using different models. The models that I would recommend that easily captures it, and it's much easier to do it on compliance services than it is on the core, but it is subscription and menu-based models. I don't have enough time to go in very much detail here, but those models are really designed for this type of service. And in fact, all advisory services should be built on subscription or menu-based pricing models. It just better achieves the end result. Unfortunately, that conversation will have to wait for another time. So Cloud 3, this is the highest cloud level, and this is the one that you probably hear a lot about. I call it plussing services. I know it sounds weird. Other people have used it, so it's not my coin service. However, or coined statement. However, the reality is I love this statement, Plussing Services. And the reason why is I am a strong believer of subscription-based modeling. My accounting firm is primarily built on subscription modeling, and I am building that kind of advisory program for the professionals that I consult and mentor. Anyway, Cloud 3 is Plussing Services. It's the top level of advisory. It's usually the one that everybody goes to and everybody wants to build in their system. These are what I call strategic advisory services. They're a high-level advisory service. They're the ones that you normally talk to or you hear about. Their strategic insights, helping people build their businesses, grow their businesses, reduce risk. It's usually related to financial and analysis, either related to historical information or proactive. Forecasting is a big one. Taking data, historical data, and building it into a strategy. Looking at their goals and all of that stuff, and building transformational results. It's usually primarily analytical and consultative skills, right? So these are the things that are in that third cloud. Now, the key thing is that only what ends up happening in most firms is you might have, let's look at a typical small firm of about 100 customers max, 50 to 100 bookkeeping or full service customers. When you try to do these services, you struggle because the customer has to want the service, you have to be able to provide the service, and you have to be able to market and strategize and make sure you recognize when that service is in place. So it's very hard to do, but some companies are very good at it. They've built the system, and usually it's about 20, 30%, 40%. Sometimes the good ones can go up to 50% of their customer base providing these services, right? So there is value in here. It's not going to be as valuable as the two other cloud advisor services because those ones are kind of built in and baked into the service. What you're trying to do now is flip the script on those services and focus on the advisory components so that the customer values the advisory part of those services. What you'll notice is based on trust that we've talked about, you can charge a higher premium because they understand that your value there is no longer in what you do, but the skills and the analytical security that you provide with the advice on those services. So this one here is much more easily identified. It's easier to pick out, much harder to implement. It's not an easy implementation. When we talk about these services, it's not easy to implement. Everybody wants to do them because they go, it's a high return and all that. And yes, when you go into this world, the price points go much higher, the price sensitivity is less, but it's not an easy place to go. So let's talk about some of the issues about implementing Plussing services. One is your firm capacity, right? We generally think that we can just bring it into the system. I have people that could do this. They could do forecasts, they could do that. But what happens if they're already at 100%, 110% capacity doing other work? What happens if they're doing all compliance work? How are you going to get them to do it? Or what usually happens, we start off with the owner or the primary owner of the firm who does the Plussing services. Yeah, but he's running a company, right? So he's going to max out pretty quick, and then he's going to want other people to do stuff. And this is where it starts to fall apart because we cannot provide the level of promises we make when we do them. So capacity is always a big issue. So if you want to do Plussing services, before you even do the Plussing services, you have to start talking about capacity. Then the skill set. Well, maybe you do have team members that can do forecasting, budgeting, analytical stuff, right? Maybe you do. And if you do, great. But what are they doing now, right? They're probably doing something else. So you want to give them this service. Well, just because they know how to do it, they might not know how to deliver it. So there might be a training component. They might have to be a reallocation of their time. They might have to want to do it. The other thing is, just because your team can do it doesn't mean they want to do it. Maybe they like doing what they're doing. You're gonna have a hard time convincing people to do plussing services if they don't like it or don't want to do it. Everybody goes, "Oh yeah, I'd love to do it," and then when they get there, they don't do a great job, right? Then there's the communication barrier to the customer, right? How do you tell them that this is a high value item? It sounds easy, but it's not. And we talked about transformation services, transformation communication. It's easier said than done. And I know there's programs out there. I know that there's people out there that talk about how to reposition and how to communicate more effectively. And you have to do that. The other part, these plussing services aren't for everybody on your customer base. But you have to be able to have a detection system, right? How do you detect it? If you don't have a proactive detection system to know when an opportunity comes on board, how many did you miss, right? And then the type of pricing model and business model that you need for these is not hourly based. You have to then switch to what we call value-based pricing models. Now, value-based pricing models, like we talked about, is the fixed fee value-based, which I call one type, where then there per customer. Then there's the menu-based, value-based model, which is the customer self-selects more or less. You set up these systems, and the third one is a subscription-based model, where it's completely different, and it takes a whole different grouping and understanding. But those are all value-based models. They're different in nature. They focus on different things, but you have to get away from traditional historical tracking of time. And then you have to think about plussing services as a partnership mindset. You're no longer there to provide a service. You're there to help them grow their business and to be successful or risk mitigate. And that means you got to be side by side. Not necessarily you, but your firm has to be side by side. And if you're not, this is going to fall apart. I usually find everybody going here and wanting to build this. And by the way, it's doable. I've been asked to help certain firms to do this. And when I go in, normally we're 2 years apart before they can actually do it, because there's other things that they have to deal with. So I think you should be on this cloud. This is the highest flying cloud. It's the most profitable cloud, but it's not where I would start. I would start with cloud 1 and cloud 2. And this one I would do, if you don't understand this, and you don't have to go here, by the way. You can have a very successful practice in cloud 1 and cloud 2. You don't have to go to plussing. But if you do want to go here, and this is the most fun place to be. I love being up here too in my firm. So you can build it and you can have a good service. All right. So now that we've talked about the three clouds, we've talked about trust, how trust is your core service. Let's talk a little bit about the models that you should start looking at. Okay, you've heard this. I've been mentoring for the past 10, 12 years, bookkeeping and accounting firms, and every firm I go into still has a billing component. Some people go, "Oh, we don't bill anymore." Well, if you use hours to track customer interaction, and that interaction is tied to how much money you're going to charge them, meaning that if we work 40 hours on this thing, the hours dictate whether or not how much money the value is. You're still on an hourly billing model. And if you're tracking individual customers, you're still on an hourly billing model. Okay, because the reality is customers and how your team works, they don't work by the hour. Your team is not a widget. Your staff is multifaceted. Your staff accountant or your professional bookkeeper or whatever has a whole slew of skill sets built into into their intellectual capital. And at any point in time, they're going to be using different levels of that skill set depending on what's coming up from that customer base, right? And to figure out and parse when they've used the top level of the skill set to the bottom level of the skill set and pricing that out is ridiculous, right? So it's not an efficient, sorry, it's not an effective way of determining value. So what value-based pricing models do is they no longer look at the inputs. They don't longer really look at the skill sets and so forth. They look at what's the value of that outcome or that service to the customer, his perception or her perception of that value. That's the real value. It's not internal. It's the perceived value from the customer. And the whole point is you have to end your billable hour. If you don't, you can't get into advisory. You can, but it's not going to be effective. Yeah, sure. Billing by the hour is very efficient. You can track it. You can do ROIs on it. You can do all sorts of tests on it, but it's not. It's just a false sense of security. And I'm going to be very strong on this. Anybody out there who's billing by the hour, you know, you're going to find difficulty in making money. Right? Even the professional accountants, they think they're making money, but at the end of the day, it's not as effective as it used to be. And I know that because more and more firms that I talk to are trying to get away from it. So value based is the way to go. Transition to value pricing. Well, what is value to the customer? Right? Let's start about that. Let's just talk a little bit about that. Value to the customer is literally how it impacts their business. And that's what you have to do. You have to communicate what I'm doing here will make you go to there, or it will improve your goals, or you can take a couple of the hats that you're wearing and focus on something personal. If you don't tie it into their goals and the business's goals, it becomes very difficult. Now, understand what I'm talking about here is the small business owner. I'm talking about the small professional firm. I'm not looking at the mid-sized to large firms. I'm not looking at the big firm, the big companies that have 10, 15, 20 million dollar in revenue. I'm talking about your customer base, which is usually owner operator, which is usually anywhere from $500,000 up to 5 million is probably your core group. These people, right, are your people that you're going to service. So they are still very goal oriented, personal goal oriented stuff. It's about their business. Their business is their life, right? So if you don't change the value perspective to talk about their value, it's going to be hard for you to do this. So here's the models that you should look at. Subscription pricing. Honestly, if you haven't read Ron Baker's book, Time's Up, I think you should. He's probably the person that's promoting it the most. He's a good friend of mine, and I do believe that that's the book to start. I've been doing menu-based modeling for about 7 or 8 years now, but I've really strongly looked at, because I do have an accounting firm, of building solely based subscription-based modeling. And that really, and the reason why I'm doing that is because I'm focusing on the advisory components of my services, not what we do. Subscription models also change the whole narrative. It's no longer on the individual services. When you have a subscription, you have a relationship with the firm. It allows them to have access to your services in a way that meets their needs and demands. You no longer focus on your time inputs. Your whole company focuses on making sure you're meeting their goals and aspirations. How you determine the profitability of your firm is completely different. So we're not going to go into that. Again, there are books out there to tell you how you would have to look at that. The other thing that you should look at is structured package models, right? Packages are the way to go if you're not going to do a complete subscription model. And the other one, I call it a hybrid model, and that's a menu-based system where software companies do them all the time. Take a look at their software. These are the things that you have to do to design the right model. And if you want to really fly high on your magic carpet firm and fly high on all three advisory clouds, you have to go into some sort of value-based. My recommendation is subscription. All right. The thing that everybody wants to do is they want to build a firm that lasts. Well, I'm going to talk to you about big picture now. Talking to you about what you need to do to build a firm that lasts. Well, if you're not engaging in all the automation services that are out there, if you don't know what the state of the art stuff is, and if you don't know and engage in artificial intelligence, but not just, I'm going to be honest with you, not just pick it up because everybody says it. Try to figure out what is good and what's not. There's way too much out there right now. The other part is if you don't empathize with your customers, if you don't have an empathy component where you care and is built into your core, and that's empathy means to me is another word for, let's get that trust built in. You're not going to have the relationships and the profitability and also the personal satisfaction that you need in our firm, in our profession. We are out here to help people, professional bookkeepers and accountants. We're problem solvers from day one. We picked this type of problem solving, and we also are very people oriented. I don't care what anybody says, whether you're an introvert or not, or an extrovert. Bookkeepers and accountants are very people oriented. They want to help people. Sure, they want to make money. Who doesn't, right? Everybody wants to have a good living. Everybody wants to strive. But at the end of the day, we get the best feeling is when our customers succeed and we know that we'd help them. Whether they recognize it or not, that's on us to let them know, right? You must always focus on technology. If your core development of your firm is not technology based, which means you're going to have to, don't worry about, my software costs me thousands of dollars. Well, if it's 10,000, you're making 50, I agree. That's way too much. But if you're a $300,000 or $400,000 company and your software costs and your technology and all of your development costs are like 20 grand, 30 grand, that's no longer, it might come, in my opinion, the future of the firms now who invest at least 15% of their money or their cost on technology and making sure that their firm is at the forefront of technology and always advancing and making sure that they're utilizing it the best way for their customer base is always going to be ahead of everybody else. But you have to invest. And the last thing that you have to do is build relationships with your customers. It's all about relationships. We're getting away from it because we don't see them as much, right? But at the end of the day, trust and relationship has to be in the firm. We are, for the primary role, ours is a trusted advisor. I know that's been used forever. I know it's been out there for so long. I get it, right? It's been used incorrectly. But our role is their trusted advisor. Understand what that means. If you build it into your system, you build it into your magic carpet firm, and you fly high on the advisory side and you communicate that well, you are their trusted advisor and you're in a relationship with your customer. How many of you have customers of 10, 20, 30 years? Some of you haven't been in practice that long. Fair enough. But there are others that have, right? Some of them are multi-generational. Their father was an accountant, and the customer was from the two dads. Now the son's taking over, the daughter's taking over, and they're still with the firm. That happens. Why? Because you're in a relationship. You're in a trusted relationship. These are things that you can look at. Reflection and legacy, meaningful client conversations, transforming your bookkeeping services. I've already gone through this to some extent. Okay, so that's it. Uh, if you want to know more, I've done a comprehensive 32-page summary or write-up on this topic that you can read. It's got a bit of an appendix on it as well. If you would like that information, please, I'm going to go back one page. Please contact Dave from the Successful Bookkeepers, and all you have to do to get a copy is go to the Community Accounting YouTube channel and subscribe. That's where I live. I do a lot of interviews there, and I would love to have your support on that. So thank you very much for your time. I really appreciated the the dedication you had listening to me. And again, if you have not had aha moments, you should listen to this again, because throughout this process, there was a lot of aha moments. Thank you very much, and enjoy the rest of the the show. Bye for now.